Should you get a home loan through one of the big four banks or a smaller lender? And what are the differences? In today's video, we're going to discuss the fees, rates, loan features, customer service and approval times, and you might be surprised. Let's jump in. The first factor that you should consider are the home loan rates that are on offer. Smaller lenders often have lower overheads and operating costs, which allows them to have more competitive rates for their customers. The big four banks need to generate sufficient profits to appease their shareholders. They also know that their loyal existing customers are more likely to get a home loan through a branch than shop around. This and a combination of other factors often means that the interest rates at big four banks aren't as competitive. In a study of owner-occupied loans that settled at Lendy during the first 6 months of 2020, it was shown that the median interest rates by the big four banks on average were 8 basis points higher than other lenders. While it's tempting to choose the bank or lender that offers the lowest interest rate, it's not the only thing that you should consider. The second factor that you should consider are associated fees and available offers. While upfront fees vary from lender to lender, according to CanStar's Group's Steve Mickenbecker, the current average upfront fee sits around $520 in comparison to the market average of $670, which isn't a big difference in fact. It's also important to keep your eye out for any available offers, such as cashback or frequent flyer points, and make this part of the broader package. While some of the big four banks have offered $2,000 in cashback, we have occasionally seen the smaller lenders offer up to $4,000. This amount can be used to cover any of the refinancing or break costs. The third fact that you should consider are the loan features being offered. Different lenders will have specific types of products that they offer, and you'll need to consider which product suits your needs. For example, many smaller lenders will not offer an offset or a redraw facility as part of your home loan package. If you're after a package with multiple offset accounts or multiple credit cards, one of the big four banks might be a better option for your needs. When it comes to loans with fixed interest rates, the limit of extra repayments can differ between lenders. The big four banks have a lower average allowable annual extra repayment of $16,250 compared to the market average of $21,800. When you're exploring your different home loan options, make sure that your home loan selected meets your needs and long-term objectives. The fourth factor that you should consider before deciding on a lender is their customer service. The big four banks win when it comes to having conveniently located branches, but the smaller lenders often focus on a more personalised customer experience through attentive call centres and an online slick platform experience. If you like having the tangibility of a physical local branch that you can walk into and speak to a representative, then one of the big four banks is probably for you. However, if you're tech savvy and happy to do all of your banking online, most of the smaller lenders will offer phone and internet banking. As we move into a more digitalised world, we've seen more and more people opting for online lenders than your traditional bricks and mortar stores, placing less relevance on this when choosing a home loan. The final factor that you should consider when getting a home loan is the approval time. A lot of lenders might offer incredibly low rates to attract customers, but then they can become completely overwhelmed with the amount of applications they receive. This means that it can take a lot longer to get your home loan application approved. If you have a short window to get your finances sorted, this could mess up your purchase plans. You could potentially lose your deposit before settlement date if your loan is not approved. The big four banks have significant back office resources and strong process-driven procedures, and entire teams dedicated to assessing and approving home loans. Smaller lenders don't have the same level of resources and staff, which means that the loan application process can be a lot slower. However, since the 2 rate cuts in March, the big four banks have been flooded with applications, which is significantly increasing their assessment timeframes. During the first half of 2020, the average time to refinance a home loan with the big four banks was 54 days, as opposed to 36 days with a smaller lender. In order to find out which lenders currently have the shortest approval time, I'd recommend that you speak to a home loan specialist who can give you the options for the lender which might best suit your needs. If you considered all of the above, but you're still unsure about smaller lenders, you're not on your own. Many people still feel that a smaller lender is less secure if there was an economic crisis, and ultimately there may be a small chance that they could lose their loan or their home. The reality is, however, that most small and online lenders have the backing of the big four banks. Banks, credit unions and building societies are authorised deposit-taking institutions, which means that any deposit that they take under $250,000 is guaranteed by the government. Small lenders that are banks, credit unions, building societies and neobanks are all heavily regulated by APRA. Before settling on a lender, do the research on both the company itself and any other companies that are within the group. Although small lenders could be impacted by economic instability, if your lender is failing, there are several likely scenarios that will protect you as the borrower. The smaller lender is bought or acquired by a larger lender. A larger institution could buy your mortgage from a smaller lender. The government provides assistance via the deposit guarantee. In all of these scenarios, nothing much changes for you as the borrower, except you might get a new lender. If your new lender decides to rise your interest rate, maybe because it costs them a lot of money to buy the smaller lender, you can always refinance to a new bank. Now, there are a lot of criteria to take into account, and if you're having difficulty figuring out which lender will best suit your needs, you can go through an online home loan platform like Lendy. You'll be able to compare over 2,000 products from 35 different banks or lenders, which will help get you matched to your right loan. And if you need any assistance along the way, we have a team of home loan specialists that are there to help you. So that's it, guys. 5 important factors to consider when deciding whether you should get a home loan with the Big Four or a smaller lender. If you're looking for more information on the Big Four versus smaller lenders, you can check out our video here, where we'll debunk some of the biggest home loan myths. See you there.